Hey, everybody. Great to be back with you here. Mike Fairborn for our markets and sectors class. Folks, plenty to talk about this week. A lot of volatility. We started off strong with the volatility on some of the geopolitical worries, but that kind of faded a little bit. We saw a bounce in the market, folks. We're just literally about 1% off the highs on the S&P 500. The NASDAQ breaking above those highs. What are some of the stocks that are breaking out today? What are some of the companies that are responding well over earnings, recent earnings as well? I want to take a look at that too. And then also taking a look at maybe some of the macro drivers that are out there. Definitely we'll look at sectors, but ultimately we do want to take a look at some stock trades, putting in some stock trade examples as we go in, as we look into it, specifically around some of those themes and what we see strong within the markets. What sectors are performing? We want to keep eyes on that. So great to be with you all today. Just going to take a quick look at our chat. Welcome to all of you. Can't see the top chat, but welcome whoever you are. Hello to you, Jay Richardson. We've got David, Life in the Fast Lane, Beth Will, a lot of the usual suspects. Great to see you here, folks. We've got Cobra, some new names, as well as Do Not Copy. Folks, welcome. Good to have you here. That chat box is open, that chat, for any questions, comments you might have. We'd love to try to address those for you. I am sitting in here with a good friend of mine, Cameron May, a good colleague, and Cameron, you can follow us. He put our Twitter or X handles into the chat. I'm still calling it Twitter after this long, but you got to spell these names correctly. Cameron May CS, Mike Fairborn CS. Otherwise, folks, there are quite a few imposters out there that do drag along a little bit. But having said that, let's dive on into it. Start off with some disclosures here. Good to have you all on board, and welcome to all of you. Information here is provided for general information purposes only. Paper Money software application is provided for educational purposes only. Now, investing does involve risk, including for some products more than your initial investment. We do have a little breakdown here. We do look at some of the charts of futures. We don't trade any futures here, but we do like to look at the charts. So we've got some disclosures just real quickly here to note. And quickly, I'll just state that futures and futures options trading does involve substantial risk. It is not suitable for all investors. One more piece of information here before we jump into things. Past performance is no guarantee of future results or success, and historical data should not be used alone when making investment decisions. All right. Well, yes, indeed. Let's Grow says happy Wednesday, and happy Wednesday to all of you. Let's go ahead and take a look at our markets here. In fact, let's do this first. I was looking at a couple of different companies that were moving on recent earnings announcements. In fact, we've had the consumer discretionary sector really moving, and you can see Carnival is no exception. There's one of those we'll take a look at here in just a second, but as we get going, I want to take a look at just the S&P 500, looking at this week, namely this week specifically. As we look at the S&P, and you can see up top here, yeah, clearly we do have that is a long-term level of potential resistance. It is historical, so we do pay attention to it. One of the key things that we can state with this resistance line is these are all-time highs. That's about approximately, folks, we're just about 1% off of that high right now, that all-time high. Not too bad. We started off actually just kind of wrapping up this week a little bit already. You can see over here, yeah, there was actually quite a bit of movement around that 6,000 level where we have seen some resistance. It's one of those big round numbers. That again, as we use the ES, you guys remember this. I don't think the volume profile has changed too much. Volume P, as we just look at volume as it stacks across on a horizontal basis as opposed to a vertical. And let's just go ahead and set it up the way that it is. You can see up top here, right here, we had a lot of activity around 6,000. That level has raised a little bit, but we had a ton of trading over the last 1 year. And it's mainly this range right through here that's accounted for this massive, giant spike in volume, the biggest spike of the year. Now, one interesting thing we'll note is because it is all-time highs, if I just scoot this down here, if we break out above here, folks, how much volume do we potentially have that could halt the trading over here or just kind of slow things down? Technically, we have zero because it is an all-time new high. So certainly no trading over the last 1 year over that particular time frame. So that's something to be mindful of, as you can see right there. If you can break out, sometimes there's not a lot of resistance, and we're very, very close to that level right now. So I'm going to take that off for now, but that is the volume profile. Always gives us sort of an interesting view of what could be going on there. All right. Well, on Wednesday, though, as we were holding at that level, I was just curious what would happen. It was kind of a back and forth. It was a bit of a choppy market. We did close higher. There was a lot of geopolitical kind of concerns that were going on right at that time frame. And in addition to that, the Fed was they had some cautious commentary as well. We did break out from there, as you could see, and we began to test those levels. Now, what we did see at the same time, and this is of interest too, because when you see traders, investors, maybe even institutions begin to exit due to a breakdown, sometimes, those treasury yields, we saw them break down a little bit, can reduce the competitive pressure. Now, there was a breakdown, as you can see right there, on that day, Monday, coming down a little bit here. So markets posing, pricing in some possible rate cuts, as you can see right through there. And we saw it dip a little bit. Now, there is more to say about the possibility of rate cuts. In fact, as we got into really Tuesday on the markets, we continued to dip. This is still, by the way, on interest rates. And by the way, we have to use this symbol now, TNX colon CGI. It used to be just be TNX, but that is our 10-year, as you can see right there. But we did begin to dip. Quick note, though, it is still a higher low. And these are still fascinating because these trends can still exist, even as we're looking at the Treasury yields here, the note specifically. So interesting there. Now, as we take a look at oil, because oil began to really come down. We had one speculative trade in one of my classes we were just looking at it. It was just a paper trade with the possibility of oil maybe going higher. We just didn't know what was going to happen. This was pre the U.S. bombing in Iraq, those nuclear sites. But that is the significant pullback here. Now, all else being equal, lower energy prices, lower oil prices can reduce inflationary pressure. Okay. Now, the Fed, they'll typically raise interest rates if inflationary pressure is high. What did we just see with interest rates? They're coming down a little bit. They don't tend to cut rates. So we'll just see what does tend to happen in this environment. But that's when they'll raise rates with inflationary pressures. And if we don't get that, then we'll see what does happen. And oil could be pushing down that inflationary pressure, which it's kind of giving maybe a little bit of a boost to the market. And that's maybe where we're seeing some strength right here. Now, looking at the S&P, we're right at this level. The NDX, the NASDAQ, looking at the tech heavy group, it did break out. We've been talking about this for quite some time, that the NASDAQ and tech stocks will tend to be generally first out of the gates if the economy starts to strengthen. They tend to, they're growth stocks. If the economy's growing, they tend to grow and grow better. This is kind of sort of a move here that we posted previously, sort of a measured move off this range. And the top end of that range is really quite high. We don't know if we'll get to that range. It's way up there, but we're still continuing on up. As you can see, we did break the high yesterday, a closing high. We are up again today at that level. But that is the ultimate target, folks, if we do use a measured range off this bottom. What we were initially doing, and some of you in the chat had caught this. Remember this pattern we looked at? Price pattern, shoulder, head and shoulder right there. Right? Inverted head and shoulders pattern. We were seeing a lot of these head and shoulders patterns. In fact, they're still out there. Quite a few of them are in the market right now. The oil group is one too that has quite a bit of these head and shoulders, inverted head and shoulders patterns, or head and shoulders bottoms patterns. But what we're doing is we're taking that range. And so you can see that we're still, let's see, if we put the middle range in there, we're very close to maybe the middle of the projected top, maybe a little bit above that middle, but there could still be more room to go using that longer range. By the way, just as a quick note, just as a total side note, here is an example of like an energy stock. A lot have been down with the price of oil, but can you see clearly here how many of these look like that shoulder, head, shoulder? There's your breakout. There's just plenty of them out there amongst the different sectors for sure. Now, speaking of sectors, let's dive into the sectors. I've actually just detached this so we can see it. Just got to pull it up right here and we'll get rolling. So, it's interesting when you look at sectors, they're made up of a combination of stocks. This is, ooh, that changed. I didn't mean to do that. I think that's the energy sector up top. Notice what happened is it wasn't linked to it. So we have energy. Let me do this. I'm going to show you how we can find energy, that symbol. Anytime this does happen, I think it was because it was detached. But all you want to do is go into your market watch, go to the S&P, because I do need to replace this. But I just want to go up top and just show you how I do it. Where is energy? So it's $ SP500 number 10. So I'll put that in over here. It's basically this with the 10 at the end. Yeah. So that's the one. I just remembered energy is the one we have up top. So that is a look at all 11 sectors. Again, if you're just saying this for the first time, let me share it because these can be helpful. I'm sharing it as a grid. So you can put this into your Thinkorswim and utilize this too if you want. Of course, you can change the colors on it, whatever you'd like to do. But here it goes. Here she goes right there. Hello to you, Mighty Mouse, just joining us, as well as BJ and others. Welcome, welcome. Here you go. Let's pull this back up again. It wants to keep shutting on me. Minimizing. There you go. So looking at it right now, when we look at the sectors, one key thing to note, notice the lack of volatility that we're getting in these sectors. They're just not as volatile. Now, why would that be the case? These are all S&P stocks, S&P 500 stocks that make up these 11 sectors, with the S&P down here, the combination of all 500 roughly in the bottom right-hand corner. But why is that? Why is it less volatile? Why do some traders use ETFs on sectors or industries? One of those reasons is volatility. If we were just to choose any of these, let's go over here. Here is industrials. We can use any of these, but industrials is made up, I want to say, of like 50 plus industrial companies within the S&P 500. Some are going up, some are going down. The ones that are going up are offset by the ones going down. So they tend to be really sort of mild moves. Now, these are just all indices here we're looking at, but they still give you a really good sense of what's happening, maybe behind the scenes, with these baskets, these large baskets of sectors in the S&P 500. Take a look at, we've talked about this for about 4 weeks now, but industrials, that has a very, very interesting image. I'm just going to click on it again, and it might continue to bring a lot of people to check out these sorts of companies, but they got to be looking at the sector first, right? Now, there is an ETF for this sector, but the index that we're looking at up here is very, very similar to it. It's not really an index, it's a basket of the companies that are within that sector right now. What do you guys see? That is a breakout above highs. It's a breakout. I'll just say break. It's breaking those highs, and it may continue. A lot of traders will look for that, but collectively, that's what that group is doing. For a group to collectively break a high and then kind of flag over here for that to happen, we'll see if that flag unfolds. But there's your flag. Oftentimes, not every time, but oftentimes, there can be some fundamental drivers behind the scenes. One of the macro drivers we're going to keep talking about, because we're starting to still continue to see it unfold on this chart, and that is the impact of tariffs. And I'm talking about U.S. companies, which is what we're looking at here, in the U.S. with the possibility of growth. This is the recovery. This is really the move. This is looking like it could have been a shoulder, head, shoulder, but it didn't. It just simply broke the high, jumped up higher and flagged. So areas like this can be of interest, and we've been focusing on them. In fact, one of the companies that we've looked at in here, we put a trade on, just a paper trade as we look at them, was Caterpillar. Caterpillar has kind of been, oh, this is a good little pun. It's been inching higher, right? It has been inching higher, as a Caterpillar might. But if we were looking at the sector itself, we'd still be dragging over here. But because some companies are stronger than others, and these guys really represent some of that major equipment, construction type of equipment. Looks like something, starting to just kind of move it on up. Now, if this were itself a longer term flag pattern, and I'm talking like here to here, and then we break out or retrace. I mean, that's a little bit of a range. Let's go ahead and just pull it up right now so we can see what it looks like here. In fact, one of the ways to do it, I just like to use down here, if you can see where I'm at, bottom right-hand corner of the screen, use this little tool. I think many of you are already using that, but just to the right of this, we've got Fibonacci retracements. So if I click on the retracements and extensions specifically, I can click on it, pull it down like we would look for a flag retracement. Oh, perfect. Just at the very top is the potential 100% move if this were to be a flag. And where are we at right now? We're not even at 50% left. So yes, as people look at this, there could be more than 50% left in this move if we do get a giant move. We have a driver there? Well, in this class, we'd like to take a look at those sectors, tariffs, and we'll just see while I'm at it, how are we doing on this particular one? It's not up too bad. We just did 50 shares is all. It's an expensive stock, but this one continues to go up. We bought it kind of on that flag, but it was really a macro driver that we were looking at. So we'll keep that within our paper money portfolio for this class as we look at it, folks. But again, how did we find that? We just looked and saw it. When there are sectors coming up, a lot of times there are macroeconomic indications that are behind the scenes that could be pushing it higher. Now, oil had been going higher too, or I should say oil had been going higher, but then it dipped. One thing we can say about oil is it's very, very, very volatile. And we do know this, that the current administration, the Trump administration, would like to keep oil prices low. And again, what does that do for inflation? Inflationary pressures, right? Reduces inflationary pressures. What could that do? Remember, they're going to be raising rates if inflation is up or cutting them. The one thing that the administration wants, I think every administration wants, is a cut of interest rates. Lower oil prices could do it. That's one interesting driver. And some of those geopolitical tensions might be easing a little bit. We don't know. Things change so fast, but maybe currently relative to where they were last week, potentially easing, right, with a ceasefire. We'll see if that stays in effect. Like I said, it ties in to the uncertainty and volatility that you'll get within energy. But there are some interesting components to that, like we just looked at with interest rates. So that's something to watch, and that could drive the market into new highs. Like we said, the NASDAQ is already getting there right now. It's already there. So what else do we have here? What's been the driver? The first thing I showed you guys was CCL on the chart. That's actually what I was going to show today. It just so happened to be the one on the screen. But look at this too. I mean, we did break a high. No sense just squinting. Let's just maximize that sell. There it is. So you can see it is somewhat similar actually to discretionary to industrials. We did break a high, and it does appear that there could be a little bit of a flag type formation over here. There's the flag. Will it break or not? Well, there are some cool things we can do. First of all, we can screen out for some companies that have been moving in here. In fact, I want to take a look at some of those. Some of the earnings are showing some strength as well. But could we potentially just right-click here, create an alert on this S&P 500 consumer discretionary sector? Heck yes. It's just as simple as that. Just a right-click and then a left-click. So, I mean, we could just say, breakout, have this text us if it's breaking out. Really, we're just looking at sector strength here. And one of the things you'll note, and I never respected this when I first started trading. I figured, I was so smart in a lot of ways, and I knew what was going on. But a lot of times I would actually end up buying at resistance because of my anticipation of prices breaking out. But that is still, in fact, a technician would still refer to that as resistance. It is resistance until it breaks above, and then it may become support once you get above it. And if you can get the whole basket of companies within here doing it, that can prove that there might be, or it doesn't really prove, but it might lead to an indication that there's something fundamental behind the scenes that are actually driving these prices higher. Okay. Just going to pop back right there. But just a case in point, what could be driving these higher? Well, there's CCL right there. There you are. There is CCL, Carnival Cruise Line. Believe me, that's going to fit smack dab in the middle of discretionary. People taking cruises, that's not staples. That's discretionary spending for sure. What do we have over here? Well, it broke out. It beat earnings by about, it looks to be like about 12 cents or so. And they may have guided higher as well. This has been down for a little bit. So some of these could be of interest as well, particularly, I mean, if the interest rate cutting begins to unfold, that could be of interest as well. So we'll see what happens here. By the way, just a quick note, I just had to point this out. Money flow way above highs, way above highs. Look over here with me. That's the high. This is the high. And where are we here? Well, we don't have a new high on price, but we do have a new high. You can see right there. That is a new high on the MF. The MF is high. And oftentimes when you get the money flow, what the money flow indicator tries to tell you is that, hey, we should take out that level. So we'll see. The trend is interesting. You got a higher high, higher low. Earnings can help to facilitate a move up as well, but we'll see. That's it's always a question, but that could be another area that we could look at. What else is showing some strength? Infotech already breaking higher. That's already breaking out. Think of some of the quality names out there too in technology. Maybe some of the Mag 7 names possibly. You can see us breaking out right there. Communication services not too far behind. Quite a few flag patterns and still some downward moves as well. A look at some of these companies, because I did want to take a look just briefly at them before I wanted to take a look also at some of the breakouts that we're seeing, because some of the breakouts are happening in the tech group. One that's just really, really straightforward here is, let's go into this. I mean, just in terms of, well, it's getting close, I should say. DXCM. See, it's still at resistance. I'm sorry. This is one that had been down for a while, but it actually, yeah, I saw the day yesterday. It didn't follow through the same amount, but there you go. And that was actually still at resistance. So what I want to do is I want to look at tech and see what companies within the tech group in the S&P 500, or really what we could do is we could look at the NASDAQ as well and just see how they're doing. What does the strength over the last 5 days look like? Because you did note over here that on tech, we're probably seeing over the last, I guess, really 3 days here, but five's fine. The last 5 days, what's really moving? Because is it breaking out of a range as well? What are the leaders in the group? Well, I'm going to jump over here and we're just going to use that scan tab, which we do frequently here. I'm just going to go with I'm going to try the NASDAQ. It'll be actually even a quicker scan. Pulling in the scan in. Again, folks, we are in scan and then the stock hacker. So sub-tab stock hacker, you've got to be here in order to see this. And we're just going to scan in the public folder, which is the NASDAQ. And there you go. You can intersect that with or exclude it, whatever you want, but it is tech heavy, we know. And I'll go ahead and scan this. If you are new for the first time, this class, like our other classes, they go through a process of being recorded. So you may want to go back and just take a quick peek if there are other areas within this class that, you might find helpful to review again. Because I do tend to go through a little bit quicker to get through more information. But yeah, you can always do that just to kind of get a feel for things and see what we're clicking on if I happen to go over something a little too quick for you. But that is how we scan into this area. I'm going to scan right here and show you what has been moving. Oh boy. Is there any question here? Let's see. I'm going to just go ahead and just highlight some of these areas. Look at this. I'll just put it in blue. There's semiconductors. There's another one sticking out and another one before we get into this group right there. Because I've organized this by that PCT, percent 5-day change, as a percent, which is a great way to kind of get these lists organized, respective of their, their share price, whatever. You're just looking at the percentage moves and you got it right there. What's our big leader? AMD, up quite a bit. And a lot of these companies have been down for a while. AMD is one that's been breaking up. I know we briefly mentioned AMD and the semiconductors last week, but here we are again. We're coming back to them again. Last week was one thing. This week is another. Remember, we talked about the investments made by Saudi Arabia into AMD and NVIDIA, which is right there as well. Let's just take a look at a few of these. AMD right now, okay, breaking out, was showing strength, but clearly over the last 5 days breaking out. Now, a lot of times traders would look at something like this and say, do I buy up here? Really? Do I really buy after it's run up that much? Some people do. And that may be sort of the trade that they're looking at as it's run up as much, because maybe they have a shorter term kind of a schedule on this trade, and they might be willing to get in and out over a shorter term time frame. There is this big 150 up here. I don't know if it'll bounce off that or not, but sometimes traders would do this too. They might say, gosh, that's a pretty good looking trend here. Higher highs, higher lows with a lot of strength. I mean, even just the last 2 days, and it's safe to say there's a little, just a little bit of volume over here. Look at that. I mean, that's kind of where we've sort of, I don't want to say plateau, but it is sort of a higher plateau. Look down here. It even exceeds this low level, where a lot of times you get a lot of big selling right at maybe towards the bottom. But look at this. If I just draw this line all the way across here, do you think we might be getting some market participants coming in here? Last time we saw that, folks, that was back in 24. And that was actually a bottom in 2024 right here for this rally. Like I said, bottoms can be a big area, but this is different. What we're talking about here is a change in trend. A change in trend that might have some legs possibly behind it. We're seeing the whole sector go up as the technology group's breaking higher. So what, again, is the expectation? We're looking at technology. That expectation could be that the economy is going to improve, cooler heads might prevail, interest rates might ultimately be cut, providing more fuel to the market. Because we said when the economy grows faster, oftentimes, not every time, nothing's in every time, but a lot of times you will see the growth stocks, and that's tech. Tech is a growth stock. They're the ones that might tend to break out and actually kind of run the fastest. These are some of the stronger trends. Semiconductors, maybe the strongest group over the last 5 days. This company, the strongest of the strongest group. So what is this whole thing getting at? Well, if you don't like to buy because you see it's a little bit long in the tooth here, you could always just say, well, maybe this pullback could be interesting. Maybe it rests on a prior high, maybe not, but maybe a pullback or a flag after a strong trend that has some sector strength behind it. We saw with sector and industry. So the sector being technology, the industry being semiconductors, broadly speaking. There are a few different baskets in those semiconductors, but that's sort of top-down analysis, right? Market nearing highs, tech breaking up, the sector. This is the stronger industry, and now we're looking at the strongest company within that industry. So, like I said, some might look at this and say, Mike, you know what? This is my time frame. I gravitate to the 30-minute chart, and they trade these little mini flags over here. Whatever, on this move. And that could very well be the case. The only thing I would say, a caution too on that, when it's shorter term, the volatility tends to be higher. And you can wake up one morning and for some reason it's down here. It just gaps, right? Because you're looking at a shorter term time frame. So that is one element you just want to be mindful of. But there you go. So what were some of those other ones? That ARM was in there. I did want to look at NVIDIA and AVGO as well. So just looking at a few of these, quite a bit of strength. Will this reestablish a longer term trend is the question. NVIDIA, I believe the strongest out of the group. It was in the trillions, over $1 trillion, I'll say, that Saudi Arabia had committed to the Trump administration to invest in America. Think again about investment and tariffs and things along these lines. Could play a role. I'm just trying to find the strongest ones. We're just going through that process of what we're seeing right now is the strongest. AVGO, Broadcom, resting at highs right over there. Could they move? Well, they could. They could go higher. So that's a great thing that you can get just by looking at sectors here. See, what it causes you to do is just look a little bit deeper and a little bit deeper again until you're going, oh yeah, maybe there is a reason. Gosh, maybe there's a reason why we're flagging over here and breaking out, because we're seeing more strength in those groups. More so than, let's just say, Healthcare, consumer staples have gone sideways because, again, if those interest rates, if there's that expectation of those being cut, maybe there will be more growth in the economy. Maybe these defensive groups, we've been waiting for a while to see really which direction the trend could go, but I'm just labeling these defense. Maybe they don't do as well as those that are on more on the offensive side, the growth end under the economy. Okay, let's see. Oh, yeah, let's see that. So MU does, in fact, I think that's coming up with earnings. Oh, they did. Okay, so they did have earnings, right? They did have earnings. Wait. Oh yeah, because right, we're after hour. I'm always thinking still it's 1 o'clock, even though I know every time we start at 2. We did it for 1 o'clock for the longest time, but there you go, after hours. And how are we doing after hours? Just a good quick way to take a look at this. Right in that same technology group, where are we at right now? There's your bid and ask. That was your closing price. We're clearly up after hours. We'll see where it closes because sometimes that can vary for sure. But it appears if we click here and point to it, we probably beat earnings. Yeah, we did. About 50 cents. That looks like a really big beat. Guidance plays a big role, but maybe if that economy comes back, we break above highs. And do you guys remember it? We talked about volume at the beginning. Not a lot of volume when you're above all-time highs, and sometimes that can mean some strength. We'll see on that just momentarily. All right. So there we go. Okay. So a couple things too I wanted to highlight because earnings can be of interest as well. I know as we look at earnings, some of the companies that have had we already did CCL, right? CCL had earnings that was going up. Let's go through some of the bigger names of companies that had earnings and that are up at least over a particular time frame. All right. That had a really big gap. That is Kroger. Now that does fall squarely into that defensive group, but look at that. I mean, that's up quite a bit, is Kroger right there. JBL. Oh, that's not the symbol. There we go. There's our symbol. Can you see the earnings announcement and the jump? Let's go into a 6-month chart. I think it's interesting here because in this class too, we look at sector trends and really where that sector strength is. And sometimes earnings can be a key driver really to, it kind of can give structure to a trend. If the company's growing behind the scenes, some might say, hey, what's under the hood does tend to matter a little bit, right? As opposed to just the stock itself. Maybe there is a driver behind it. That is that AVGO that we looked at. They beat earnings. It looks like they dipped, but these guys are already right back at it, potentially nearing highs. We talked about, we looked at MU, so appreciate you guys bringing that up. Here are some others that gapped up higher. This one, obviously, more of a bottom trade towards the bottom. I know some of you do like to look at some of these trades near the end for valuation purposes. And you can see down here, that looks a lot like a double bottom right there. And I would say, well, geez, just keep going back. Highs, measured move right in that range right there. About 7.5 points, 62.50, maybe a little bit higher than that, a little bit lower, I should say, maybe a few more points than 7.5, maybe 8 points. But you can see if you were to do the same thing over here, it might put your target range up here. This is more of on the bottom trade, but still, it could be insightful. And some of the ways to look at this are, hey, what's happening with that RSI? Do we start to diverge higher yet on that RSI? I'm starting to see higher highs and higher lows clearly. Major divergence off this bottom. Look at this. Higher low, higher low, higher low, higher low. Technically right now, a higher low. But like we'd said earlier, boy, it's hit resistance just a few times, hasn't it? Let's count it. 1, 2, and all through there on 1, 2, 3, 4 days are right in that range, even past earnings. But sometimes when you get past earnings, you can start to break. That's CarMax. Think about discretionary. Discretionaries, they were showing one of those too that was breaking out. Those are the two stronger areas, discretionary, technology, and communications as well. Couple more in the tech group. You guys maybe saw Dell. Dell right here. Just sort of taking out the high, a big gap there, sideways, and starting to move up. Many of these, as you look at them, have been down, folks. They've been down for a while. That's kind of your shoulder, head, shoulder again, breaking higher. So where would these targets be? Let's just draw this again so we have a sense of where the target could be. A lot of times, if you have a longer move like that, you could easily be looking for that flag pattern just to go a little bit higher, the flag. So where might that stand? Right here. Lower, higher, 70, wow, 80, 90, 100, 110. So, I mean, 45 points or so? Yeah, so, you know, this move, I mean, that's a 45-point move. So if you just say from here, you're just, 1, 2, 3, 4, really close to this high, around 150. It's close to it. That could be the target because ultimately this is what we're looking at. This flag pattern pulling back and the same length over here, kind of extending up higher. Talk a lot about this in my Tuesday class. And I was out Tuesday, so we had a coach fill in for me, but I just wanted to say we talk a lot about these flag patterns. Price patterns are interesting, but look at that right there. That's another technology stock, but we could look at the same thing as we looked at Caterpillar. Very similar kind of a price target, and something even similar to the NASDAQ 100. Okay, so we've got a few more things to look at here as we dive into this, but I wanted to highlight those for you because they are of interest. These companies every one of these I've highlighted here did beat earnings expectations thus far. So you can see that one beat, 12 cents, or, maybe more than that. Yeah, 8 cents or so, I'm sorry, 8 cents along those lines. But keep an eye on that. Of course, just real quick, ADBE, Adobe, down. It did beat short term. The one that beat and guided higher was Oracle. Above the 200, big round number, we could hold there. All right, well, what we need to do is we do need to take a look at, well, let's look at our sector. We looked at our sectors, but I wanted to also take a look at just our sector, market sector review. And we'll end off with a trade here as well, based upon some of the things we've been looking at here. How did that advanced decline line do? Did the AD line tick higher? We're not seeing really too much with the McClellan right now or the summation index. But as you can see over here, we did take out a new high. Technically, that was a new high, and that is a positive. We had on this more broad-based index, the NYSE, not 500 companies, about 2,700 companies. So you're getting some market breadth in there. The breadth broke higher. We love this guide as a breadth indication in terms of the advanced decline line. More advancers than decliners still pushing up. That's all else equal a positive. You want larger baskets of companies doing that. You tend to have more structure, and the trends will oftentimes be able to continue on easier. This was really cool too, because we did get the EW. SPX EW is that symbol. It equal weights everything. Not all the same, right? We don't have these big blocks of Netflix or Nvidia, Apple, Alphabet out there that are really pushing the market. Everything is equal on the equal weight. That's its name right there. We did make a high. Now that too is a positive. I think a lot of this might be coming into the possibility of inflation coming down and interest rates. Remember, one of the big concerns was inflation around tariffs, but we'll have to wait and see. I mean, that's why I think the market might be responding to a lot of this information that's out there right now. That's what's been being discussed. But that's the equal weight. That's a positive because previously we had not been taking out highs. In fact, here you go right there. This was not a new high, yet the market was at a new high at that point. But now we did break out. That's a positive sign. Continuing on here, we have had no indications of the Hindenburg omen down here. There's 52-week new highs and 52-week new lows. A large number of those clashing together and creating a chasm in the market like we saw over here. That is a chasm. We saw a number of those spikes, and that oftentimes can spell on a weekly chart, which is this particular screen that we look at here, or grid chart, lower lows and lower highs. We don't get that. We got none of that on this move and showing some positive breakouts. That's a really interesting sign. I was curious about that. And I'm really curious too to see how we're doing. We still do not have a number of new highs in the NYSE. They really took a big hit over the tariffs. They did. And even though we're right up to near this range, and when we break above here, my guess is that we'll see a spike down below in the NYSE new highs. But historically, that got us north of 250 in order for the trend to go higher. It might take some time to work up there. We'll see if that trend continues, if in fact we continue to trend higher. But 250 was kind of a big number. Remember, every time over here, we were spiking above 250 all through here. Anytime we had a move in the market that made a new high, we got above 250 over here. And that kind of helped to fuel, broadly speaking, because we're looking at breadth of the market here, right? This is the NYSE, 2,700 stocks. We wanted to see that breadth, and we were getting it. We got quite the inverse here when there was that tariff concern. Okay, but we'll see how that starts to unfold. And look at this. We've been saying, would we come back to our seasonality? Seasonality. Am I really going to spell this out? Okay. Seasonality. Seasonality of the S&P 500 index over a 10-year. That is the average right there, folks. That's the AVG. The average right there. Okay. So that's our average. And we'll see what we get on that. But yeah, so that's an interesting kind of a perspective going up, because a lot of times you can capture this same sort of move, going to the upside and going from there. Okay, so a quick note as we look at potentially placing a trade here in this account of paper money trade. One of the things I wanted to note is we are getting a lot of technology stocks like we just looked at that have been really quite strong. They're actually breaking out right now. And a lot of times, in this class and others, and many of the coaches they teach, that we look at this, traders will a lot of times look at a support bounce as opposed to a recent breakout. Of course, that is a breakout here over the recent high, but like some of the areas in the discretionary field, if it were to unfold, it's a little bit volatile. But for example, that CCL, CLL, if I could do it right, CCL just broke above a high over here. It's in sort of a sideways range. Some traders may be looking at this, could put on a trade in terms of a breakout in anticipation of this move continuing. All right, what I'm going to do is I'm going to do a couple of different things. I am going to, first of all, look and see if we start to take out this closing price right here. We'll use this. I'll put this trade on if that does unfold. The markets are closed right now, but if we could break above there, let's see if we can get above yesterday's closing price. And then last but not least, we want to look at something like a AMD. And we've been breaking quite a bit higher, but I want to know if, we pull back to a trend line, let me know, or to a resistance, a support level, possible support level. So his historical resistance, it appears to be right over here, a lot of touch points. I might just come over here and just say, hey, I'm looking for the possibility of a pullback. Let me know if we do break below this level. You've got to change this right here at or below this point. And just, I'm going to send that through. Again, you can set up these alerts, upper right-hand corner, hit up setup, application settings, go right into those notifications. But again, folks, we are looking at trades in this class, paper trades that might tie in. Our examples are going to be tied to some of those potential macro drivers out there. All right, everybody. Well, hey, if you're finding value from this class, if there's things that you do like, we do discuss big picture, we discuss a breakdown of the markets, and we do this on Wednesday, our last class of the day. But if you do find value out of it, do me a favor and just hit that like button. Lets me know that you find that value. Bottom right-hand corner of the screen as well. You can actually just subscribe if you're not already a subscriber. Love to have you on board. I don't know if we got a survey today. I don't believe so. Cam would have had that in. I'd be able to see it already. So we're all good there. Folks, it's been great being with you. I'll jump back and see if there's anything I missed. It was just kind of a rapid fire today, But look forward to future discussions with you, and hope you have a fantastic rest of the day. See you tomorrow, everybody. Bye bye.